Let's see. Can y'all hear me now? How about now? This had to be my laptop audio. Yeah, so basically I've got, let me just change this, hold on. Yeah, so basically my, for some reason my microphone is, the audio interface is not working right now, so let's just see here. Alright, so there we go. Okay, awesome. Anyways, we're going to just deal with the, excuse me, the computer microphone here. Yeah, anyways, so let's go ahead and jump into this. Let's talk about our, I'll kind of reset back from the beginning. So today we are talking about a lot of stuff that has happened in this space since our live stream last week. So we've gone down to one stream per week on this channel. So if you missed my update on that, and watching like, hey, where are the live streams? Well, we're doing it once per week right now on Mondays, okay? So if the space picks up and starts getting crazy again, of course we can go back to 5 days per week, but for now we're at one per week. So definitely let's get started on one of the biggest updates in the space since our live stream last week, which is the $100 million Binance hack. Okay, exactly how that happened and what you need to understand about this, okay? So let's go ahead and jump into this, all right? So last week we saw, one of the biggest blockchains and smart contract platforms out there, Binance Smart Chain, okay, exploited, okay, and the chain was actually paused for some time in order to fix this until they were able to sort of get on top of the change. So let's dive into what happened here. So, Binance Smart Chain, if you're not familiar with it, is a blockchain that supports smart contracts. It also has this native cryptocurrency associated with it, BNB, that pays the gas fees. You can buy it and hold it and just swap it on cryptocurrency exchanges, okay? But Binance Smart Chain is the underlying blockchain that, powers all that activity. So, this was exploited in a cross-chain bridge hack. Okay, so, surprise, surprise, right? We've profiled pretty much every single major crypto exploit or hack in the last 2 years and change on this channel, okay? And overwhelmingly, one of the biggest vulnerabilities and common threads through all those exploits are blockchain bridges, okay? So what is that if you're not familiar? So basically, a bridge is something that lets blockchains communicate with one another, okay? Because blockchains are closed ecosystems in and of themselves, and so let's say you had tokens on Ethereum and you wanted to move them over to Binance Smart Chain to use some apps on top of there. Well, you could go to a cryptocurrency exchange and swap your tokens and withdraw them, all right, onto a new chain, or you could use a bridge, which is basically just something that lets the two blockchains talk to one another. And bridges are notorious, absolutely notorious for getting exploited, because whenever you create a bridge, you have to create some sort of, not proprietary, but you have to create some sort of technology that lets two blockchains talk to one another that don't natively talk to one another. And that's where some of the biggest failure points are, because inside of bridges, typically how it happens is you don't just magically convert cryptocurrency from one blockchain to another. You typically you lock it into one blockchain, and then you essentially deposit it onto one blockchain and withdraw it on the other blockchain on the other side. And so to facilitate those deposits and withdrawals, that money is just sitting, parked into a blockchain on each side, and that's a huge honeypot for hackers to come in and basically, exploit those protocols. So how did this happen? Well, that's how a lot of bridges work, but another brittle aspect of those bridges is the mechanism that lets the two blockchains, talk to one another, because basically, whenever that happens, you have to tell a blockchain, hey, release money on this side, all right? So you something in the middle is actually saying, hey, go do something with this money that's parked on the other side. And if you're able to essentially manipulate the thing that unlocks that money, you sort of have the keys to the kingdom, to take that money or do whatever with it, all right? Different bridges work different ways, but that's one example of how they can be taken advantage of. So I'm going to pull up this tweet here. I'll actually put a link to it in the live chat replay here so that you can get more into this, okay? But this is from Sam Sun, one of the, kind of leading security auditors in the space, and he did a pretty good deep dive on exactly how this attack happened, okay? But basically, 5 hours ago, an attacker stole 2 million BNB, so 566 million USD, so it's a lot more than 100 million. During that time, I've been working closely with multiple parties to triage and resolve the issue. Here's how it all went, okay? So basically, I'm not going to go through exactly how he found this, how he kind of dug into it. I'll leave that thread down in the description below. But basically, the whole deal here is that that mechanism that essentially lets the two blockchains talk to one another is the thing that was manipulated and exploited. Like I was saying, you have two blockchains that don't natively talk to one another, and so you have something that has to send messages across those two chains. And basically what he's saying is there was a bug in the way that Binance, the bridge, verified proofs, which could have allowed attackers to forge arbitrary messages. These are the messages that essentially communicate across chain. Fortunately, the attacker, he was only able to forge 2 messages, but the damage could have been far worse. So that's exactly how he did it. Again, I'll put that link in the live chat replay so you can dive deeper into exactly what happened there, but that's a summary. And, you know, in the aftermath of this, while they were trying to fix the issue, you know, Binance Smart Chain was paused. Like, just paused. Straight up just stopped. So, you know, if that gives you sort of an idea of sort of the sliding scale of decentralization that exists in the space, you know, that's definitely going to go down on the reputation scorecard there as, you know, I don't know, just kind of showing your cards whenever a hack happens and the chain is paused in order to, you know, facilitate the recovery of funds. I know some people say, oh, hey, that's a legitimate reason to pause a chain, and they'll have a counter argument and say that, well, if there was some massive exploit in an underlying protocol itself, like Ethereum, for example, the community could vote, you know, to roll back the chain or something like that. That is also true, but this, you know, raised a lot of alarms for people that I'm sure many people suspected already, but that will definitely kind of go down in the indelible history of the chain itself, that it was paused in order to, you know, facilitate the recovery of this type of exploit. So let me know what you think down in the comment section below. Should they have paused the chain? Should they have not paused the chain? I want to hear your thoughts. So anyway, that is exactly how the Binance bridge hack happened. Okay, how these funds were taken and how they, you know, worked towards fixing the problem, but ultimately what happened in the midst of pausing the chain. Okay. So that's one of the biggest things that happened with the bridge exploit. Let's look at a couple other things here. So much noise in my audio. Yeah, I know it's noisy. My microphone, it's not coming into the computer right now. So I'm having to do my laptop speaker for now, or my laptop microphone. Okay, so let's now look at another thing that is on the surface doesn't look like it is crypto related, but actually has potentially some overlap in crypto. Okay. So that's actually an update what's going on with Elon Musk and the Twitter deal. So at the surface, you might say, what does this have to do with blockchain at all? What's this got to do with crypto space? Well, we've been talking for months on this channel about the potential of Twitter to implement, or Twitter to move in the direction of being a Web 3.0 company, okay? And there's a lot of people sitting around saying like, hey, you know, the thing that's likely to kick off the next wave of blockchain adoption is basically blockchain, you know, being used on apps that people are already used to using, okay? And then having a reason why they use that, and it has sort of value proposition over the existing alternatives. And, you know, Twitter very well could fit the bill for that type of thing, essentially using Web 3.0 values and or blockchain technology to accomplish those things, okay? So, you know, if you followed the timeline, the saga with the Elon deal, essentially, you know, Elon put out a tweet, you know, earlier this year, you know, asking, should the Twitter algorithm be open sourced? Okay, that was sort of the cryptic tweet that he put out before they started talking about, buying Twitter. All right. And we kind of covered that on this channel, talking about, hey, that's a very Web 3.0 value because of that transparency and the open sourcing the algorithms. People can understand how it gets used, and speculating whether that, if they could implement that. And then the conversation ensued to actually start, buying the company. So, there's been many ups and downs with this deal. Elon's kind of said a lot of stuff out in public about Twitter with spam bots, and then he sort of backed out of the deal. And there's been all this back and forth. There's been litigation. It's been quite the saga. Okay, and for some time, the public has sort of been left the impression that the deal's just sort of off. Right now, I'm sure lots of people sort of reading between the lines, say that Elon's playing. A very sophisticated game here that might very well be true, okay? But we also seen some leaks that came out from the texts from the legal proceedings that, showed that, the intentions were actually to make this, use blockchain in some way, okay? And so, we're like, hey, that was huge. And it looks like the deal is back on, all right? So as of this time, it looks like he agrees to proceed with the deal. Now, this sort of seems like an on and off again relationship. People break up, get back together, break up, get back together. So let's see if it actually has legitimate staying power after this. But if it does, then this could be a big deal. And we could actually see Twitter start to implement some of those things that we were talking about. So what types of things could those be? Well, basically, open sourcing the algorithm could be a big step in the right direction, okay, as a Web 3.0 value, because, one of the biggest complaints about social media is that the algorithms are closed source and nobody knows exactly how they work. And this can lead to problems of censorship, okay? Let me just pull this back up here. So, for example, if you look at your tweets in your timeline, how do you know that you're actually seeing... Twitter does a pretty good job of keeping people engaged in the application, but how do you know it's not promoting certain things or suppressing certain things that, is in sort of Twitter's best interest, not necessarily in yours, okay? Some people say that, okay, there's, maybe there's a bad, actor pulling levers behind the scenes, or maybe it's just bias in the models and how they get trained, okay? Whatever the issue is, there's still advanced technology that determines what you see and what you don't see, and that's the real problem, is that could lead to, problems, all right, whatever they are. And a solution to this could be open sourcing those algorithms so people can understand exactly how they work. So that's one possibility. Another possibility is basically using, he talked about having an app where people pay a small fee to put messages on the chain to prevent the spam problem. Now, I'm a little skeptical that would actually work. We've seen experiments like that in the past with blockchain, and it turns out people don't really want to pay to use social media in general, okay? But who knows? We could see that type of thing actually take off. The other potential way that I see is trying to solve the bot problem by proving that people are human. Okay, and he kind of talked about that in his leaked text, where paying for transactions would limit bot problems. But another way that I see potentially limiting bot problems having to pay per post is essentially to create some sort of blockchain-based identity solution baked in to where you can prove that you are uniquely human, even if you don't prove exactly who you are. Okay. And that proof of humanity could help prevent another account from being registered by a bot itself, okay? Thus cutting down the bot problem, and then proving that you have a social media app that's completely comprised of humans, or, pretty close, right? Way better than what you have now. So there's lots of different ways in which, Twitter could be made better with crypto. We don't exactly know what's going to stick, what's going to work, what's not, but we could see the application actually move that way if Elon agrees to go forward with the deal, and if they actually try any of the stuff that he sort of talked about behind the scenes with the stuff that we speculated on this channel. And of course, it goes without saying, if that does happen with Twitter, that's huge for the Web 3.0 and crypto space, because lots of people are sitting around scratching the head going hey, what's the next big thing? Well, to me, there's lots of ways this space could continue to evolve and grow, and one of the biggest ways could be taking an existing application with an insane number of users and sort of, introducing them to a better way of doing things with crypto rather than having to convince them to buy like magical internet money and go flip coins and NFTs for gains, especially right now when the space is so quiet. So that's definitely a huge development to keep an eye on. Let me know what you think in the comment section below. Are we actually going to move forward with the Twitter deal? If we do, will it have anything to do with Web 3.0? So as a producer, I suggest a universal audio Apollo interface. That's exactly what I have. So basically the UAD Apollo is currently like not working. It's frozen. I had to force quit the console. And it's always like, tell me about firmware updates, and I don't really like to update stuff all the time. Because sometimes when I update firmware, it just like stops working too, so. All right, so let's get into the next topic here. So here's another pretty crazy thing that happened in the space last week. Celsius has been a pretty hot topic of conversation all year because, as the crypto space has sort of been, pretty bearish, that's caused a lot of players in the space to essentially blow up, all right, and cease operations. We've seen major funds blow up. We've seen centralized lending services like Celsius have solvency issues, inability to pay back their debts. Celsius has been, the topic of conversation because, basically a huge trend of last year is essentially depositing crypto into centralized services to earn, interest and earn yield, And essentially, whenever that yield dries up, basically, where's that yield come from? So a lot of people were basically, the yield came from risky practices in the back end, and whenever the crypto space essentially started to go down, then, a lot of those services essentially blew up. And that's basically what happened to Celsius, Celsius has been going through some pretty hot water, I'll put it that way. And during this time, we've seen a pretty horrible side effect of that, which essentially Celsius knowingly doxed all their users by posting in a public hearing, So basically, they post an archive of all data for deposits withdrawal, including name, address, time, and amounts, So basically, anybody who's ever used Celsius, they have posted this data publicly available online. All right. So thankfully, I was never a Celsius customer. But if you were a Celsius customer, then all your information, from what I can understand here, I haven't really combed through all this information myself, but essentially has just been made out there open in the public. So we've seen something like this happen in the past with the Ledger data breach. So this is actually kind of different. Ledger, of course, took a lot of customer data, the hardware wallet service. Whenever they're shipping their products, basically they collect all your information. They warehouse it in a centralized data storage of some kind. And essentially, they were breached. All right, all their data was leaked and then put out there online. And of course, people were sending stuff to Ledger people, like sending crazy threats or whatnot, right? People who owned crypto. And that's a data breach, which, has a certain level of, for lack of a better word, badness to it. But this was just like straight up putting the information out there. Of course, it was for legal reasons, right? But that's another horror side effect of using centralized services because you have to understand, whenever you're putting all that data in, they're definitely storing it, they're definitely saving it, and of course that data can be compromised or it can just be put out there entirely. So this is one of the problems of centralized services just like this. So let me know down in the comment section below. Okay, so now let's take a look at sort of what's going on in the crypto markets here. Okay, so sorry, I'll pull up the price here on my chart here. Okay, so yeah, let's take a look at the crypto markets here. So basically, you've got Bitcoin still hovering around $20,000, Ether hovering around $1,300. Okay, these two things have been sort of essentially, in this range for quite some time now. Okay, more or less, right? If you look at Bitcoin on a larger, 180-day time frame, maybe even a year-long time frame, sort of a better way to look at it, we can kind of see this, general downward pattern, but we start to see a floor sort of forming here. And so the question is, could this, be a floor that actually holds, okay, before we start to make some sort of trend higher, all right? And, the positive news to that would be essentially, limiting the further downside of this asset class. I think that's the sort of the silver lining, rather than just ripping off to brand new all-time highs, like we saw, maybe last year, for example. So let's look at some of the factors influencing that, because of course the broader economy is one of the biggest factors that's influencing the crypto space this year. Of course, that's true of the stock market, it's true of so many asset classes, and crypto is no exception. And so one of the things that was influenced the crypto price last week, just like stocks and other assets, were essentially the jobs data that came out. Okay, so essentially, the Dow Jones Industrial Average and tech-heavy NASDAQ Composite S&P 500, blah, 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 which is strong. Technology component were down, a few percentage points respectively. Bitcoin fell to start off the U.S. trading day, decreasing by about 2%, all right, following the release of the U.S. jobs report, all right. Same thing with ethers and others. So basically, U.S. job growth slowed in September, but not by as much as most market observers expected. So non-farm payrolls increased by 263,000, a 17% decrease from August, but more than the projected 250,000 number here. So the unemployment rate declined to 3.5% versus expected 3.7%, and the labor participation rate was 62.3%, essentially identical to the 62.4% rate increase in the prior month. Okay, not rate increase, 62.4% rate the prior month. So basically, the employment figures offer the latest evidence that the economy is slowing, but not enough for the FOMC to justify pivoting away from its recent spate of hikes. So that's the big interpretation from the market here. So again, one of the biggest themes of the year is essentially don't fight the Fed. All right, so we saw interest rates and monetary policy in general take an immediate U-turn about a year ago. Essentially we saw the top of the market really at beginning of November in 2021, at the talk of inflation becoming a problem, sort of the theme that inflation is no longer transitory. We have to do something to fight inflation, namely start raising interest rates, which were historically low, at a historic lows. Okay, and again, I don't try to be some type of macro expert on this channel. I'm not trying to do that, but I do understand the bigger picture of what's happening here, including you in this conversation. And that's been sort of the trend, is essentially a complete change in the regime in terms of monetary policy, and that has a huge impact on assets particularly stock market, particularly crypto. Anything that has a certain risk associated with it, for sure, has been particularly hit, and crypto is no exception. So, the Fed's been continuing hike rates all year, and the question is, when is that going to end? Okay, when is that going to turn around? And every time we have some sort of data come out, every time we have a FOMC meeting, it's sort of like Groundhog's Day. I'm wondering, is the groundhog going to go back in his hole, or is it going to stay out? Is it scared of its shadow? Are we going to have 6 more weeks of winter? Is springtime going to come? And this data looks like is not in favor of slowing the hikes, but looks like there is still room to continue them. All right, so that's kind of how the market interpreted that last week, and why we saw some sort of continued bearishness on smaller time scales. Now, on larger time scales, again, one thing to consider here is sort of the trajectory of the crypto market, particularly the Bitcoin price. Okay, again, I don't try to do too much technical analysis in this channel. I don't put a ton of stock and trade into technicals themselves. I care more about the fundamentals and what's actually happening. But fundamentals and technicals and all that type of stuff kind of generally overlap when you start talking about trend reversals. And if we are actually anywhere close to the Fed pivoting, or at least the Fed slowing down what it's doing, the technicals could support essentially the price finding some sort of floor or potential reversal here, at levels around this. So really, it's one or two things. Either we start to find a floor around here, and maybe can get a range and eventually break out of this downtrend, or we continue the downtrend. So that's really what the moment of truth is here. That's what the charts are saying, at least, right? Because you have this sort of series of highs, these peaks, and you start to see if these peaks sort of line up with one another. And generally speaking, hopefully we're either going to break out of this and try something new, or continue to the downside, sort of based on that. So let me know what y'all think in the comment section below. Is it just going to be continued downside from here, or can we actually find a floor? Can we break out of this? If we actually see the price convincingly get out of this trend, then that would be, of course, a good thing. Let me know what you all think down in the comment section below. This is back down to 21,000 slow ride, but we're actually below 21,000 right now. So if you meant 2,100, that'd be pretty low. History says October month is positive. Let's see.